Okay. Siddarth Bhamre of Angel Broking also joins in. Siddarth, hi, morning. There was quite a bit of delivery-based selling that we saw in some of these banks like ICICI Bank yesterday. Technically, you are selling that stock today?
Good morning, Sonia. Yeah, so we have seen that there was a good bounce back in ICICI Bank on expiry day and post that. Reason being, it was predominantly because of short covering, and we haven't seen any formation of long positions over there. And now we are seeing again traces of formation of short positions. SBI and ICICI are getting declared as two big banks which are too good to go down. I think it doesn't changes any thing on the data front, and this stock remains sell on rise for us. We have quite aggressive downside targets, but as of now we are expecting 256 in ICICI Bank.
Okay, is there a target on the a strategy on the Nifty itself, Siddarth?
Good morning, Lata. Last week we were talking about that how despite manic Monday, market in last series, August series, may not go down significantly, and we told to write some 7700, 7600 put options, and our mono condition was that market would bounce back and probably at higher levels one should short. So if you look at on Friday, again market bounced back with not much of formation of long positions, and people would get wary about how FIs are forming long positions in index futures, but the cash based selling continued. So it was good level to go short in Nifty, and we did initiate it around short positions around 8050. We anticipate that we might go towards 7700 again. So we continue to hold on to those short positions. And Bank Nifty also, what we are observing, Lata, is that at least in Nifty we did see some formation of positions, but Bank Nifty and its components are seeing formation of short positions. And if Bank Nifty remains weak, I don't see why Nifty can breach its very strong resistance, which is now placed at 8,200 levels.
Okay. You also have a trade on Tata Motors, a sell call there. That one has been under intense pressure for very long now. What are the levels to watch?
So we have been playing the stock on the downside since quite some time. And again, just the reason like ICICI Bank, this stock again bounced back significantly from 300 odd levels. We didn't see any traces of formation of long positions. It's purely short covering rally. We had seen some stability in Chinese market. That was also one of the reasons stock bounced. Neither the stability in Chinese market may continue, and neither do this upside move in Tata Motors. Fresh shorts can be initiated at current levels for the target and stop loss mentioned on your screen.
Okay, Anand, to come back to you, what's the view you have on stocks itself? Are you picking up at current levels, or do you think the way in which global cues and domestic growth cues are panning out, you're going to get more attractive levels?
So let me break that question up in two parts. The frontline indices, I think over the next 5 to 6 months will head lower from where we are. So if you are looking to buy on the front line, maybe as a trader, this is not the best time to be looking to buy. Also, most of the companies that you want to buy are not trading cheap. Those which are trading cheap are perhaps not worthy of investment. On the other hand, there are many companies out in the broader market which seem to be doing well. Now, the biggest problem with buying mid caps is that if there is a run on liquidity, they will collapse. So therefore, you have to take a view on mid cap only on a 3 to 5 year view on the basis that the earnings has bottomed out and is likely to move up from here. Again, don't buy expensive, because if you have to buy mid cap which is expensive, you might as well buy large cap which is expensive. At least you can trade out if necessary. So either you are a long-term buyer of value, or if you are a near-term momentum trader, then the option is that you move down and trade down with the market as it goes. Of course, from a retail perspective, I would keep emphasizing that we have to look at asset allocation, because all that we say is based on probability, and we have absolutely no guarantee that what we are saying will actually happen. So you will have to keep your positions in a way that you are comfortable in terms of your overall asset allocation.
Oh, of course, there is that, of course. Do stay with us, Anand and Siddarth. We are back after a very short break, and we will have the pre-opening rates as well.
Renault Passion for Life presents Headlines of the Day. Brought to you by Renault, passion for life. CNBC TV 18, celebrating 15 years of leadership.
Hi, welcome back to the show. We have a little over a minute before we get the pre-opening rates on the screen. Anand, the place where everyone has been able to make money these days is the pharmaceutical sector, and yesterday we saw big gains in names like Lupin. Would you advise putting in more money there? Anand, is my voice reaching you? Alright, I don't think you can hear me. So that same question to you. How do you trade stocks like Lupin and Cipla now?
They're looking positive, and not just these two names, but also if you look at Dr. Reddy's and Sun Pharma, though it's not showing as good move as other names, is seeing formation of positions. So in this kind of market, pharma and IT would be preferred space. A lot of domestic mutual funds would be hiding over there. So these spaces may not correct significantly if market continues to fall.
Sell strategy as well, Siddarth?
Sorry?
HDFC sell strategy?
Yeah, we are negative on that stock. Last series there was a lot of short positions which I was building up. They have got rolled over too. And current bounce back was mainly because of short covering. Bounce back may not sustain. Go short. We have 1103 as a target for this.
Okay, that's a photo finish. We are getting the pre-opening rates, and at the moment it's looking mixed, but maybe we should pull up the SGX Nifty as a reminder that those traded markets are indicating a bigger downturn than what the SGX, the Sensex is pointing at this juncture. Both of them are indicating slight positives, the Sensex and the Nifty. Maybe we want to pull up the rupee as well. Rupee is showing some distinct signs of weakness. About 3 paise more expensive, the dollar, not a whole lot. I think we were yesterday at 66.42 thereabouts. It appears that the rupee is just slightly weaker, not terribly weak. It of course took a decent amount of knock yesterday itself, but today, okay, now at this juncture, 4 paise, the dollar is stronger at this point. Let's wait and see how things pan out for the stock markets. At the moment, there's a decent amount of green on the screen. Do we have Anand with us? Okay. Anand, Sonia was asking you about the pharma stocks. Are they a place to hide?
Well, I think again, the frontline pharma companies look to me more than fully priced. But that said, the fact that rupee is likely to move down, and this is one area which has less issues in terms of visibility of growth. Obviously it will continue to attract attention. But I'm not comfortable with the valuations of the frontline pharma. I think if you have to look at pharma, the mid-cap pharma looks better to me.
Okay, so mid-cap pharma looks better. In pre-opening, actually the rates have settled slightly lower now. So the Nifty is suggesting a cut of about 0.2%. And stocks like Ken and Vedanta are both down in pre-opening by almost about 3 to 5%. So that's one space that's not looking good. Tata Steel and a couple of these PSU banks continue to be on the downside. Any more stocks? Okay, well actually let's wait for the markets to settle down. We have Ramesh Iyer, the Managing Director of Mahindra & Mahindra Financial Services, joining us on the phone line. Ramesh, good morning. What's the reaction to the HDFC Bank's rate cut? How does that change life for you?
I mean, it's of course always a welcome change when the rates come down, and I think everyone has been waiting for, can the rate come down? But I think more importantly, if a bank has taken a lead, will we see many more bankers looking at this direction? Okay. And if that had to happen, I would think, someone like us who has decent borrowings from the banking system will definitely get the benefit of such rate drops.
In terms of higher loans, how much do you think it could help this 35 basis points rate cut? And what are you looking at in terms of your own loan growth by the end of say FY16?
See, I mean, in terms of rate benefit, as you asked about, I think HDFC is just one of the borrowing from the total borrowing. So, it will be a fractional benefit, but ultimately this is a directional thing that one can look at. Will many more banks follow? And if that had to happen, then of course, we'll have some benefit coming in because of the dependence on the bank borrowing.
Okay.
So far as loan book is concerned, I think, difficult to put out a number, but ultimately we are all enablers waiting for the auto, tractor, pre-owned vehicle market, commercial vehicle market to improve. If that had to happen, of course, all of us would be the enablers, will be the beneficiaries.
How does life change for you, Ramesh? What percentage of your loans come from banks? And do you just have to pass on this 30 basis if you get lower cost of money? You just have to pass it on as cheaper loans?
See, if you kind of look at it, about 40%, 40+% of our borrowing comes from the overall banking system. And I think for quite some time, all of us have been absorbing whatever is the cost increase. So if all the banks follow the rate cut direction, and if we were to get all of that, then surely we will also readjust our lending rates, but not necessarily, all the rate that we get as benefit will immediately get passed on, because they won't all come on day one.
Okay, so generally for the system as a whole, there is a 30, 35 basis or 40 basis rate cut. Will that make life, will that increase loans at all, say in the next couple of months?
I think at least, the sentiments turn positive when there's so much pressure in the system for everything. And if any positive step that gets taken, first of all, it changes the sentiment more favorably.
Okay.
That's the first thing. Second is, of course, when they get really passed on to the borrower, there will be some benefit, but I'm not too sure at the retail levels of vehicle buying, etc., these kind of small rate cuts is something that's waiting for the volumes to improve.
So as of now, you will not pass on this 35 basis points rate cut immediately?
Let's first come to us. Once we get it, then we will decide how to do it. But this is just, we are hearing that this rate cuts have happened and it's one bank now. But we will have to wait for directionally, is it from the banking system, and therefore does every bank that we borrow from give it to us, and how fast do we get it? But once we have it all, definitely we will also relook at our pricing.
See, everyone's talking about a CV cycle pickup. You can see it in Ashok Leyland's numbers. Is not that showing up in your loan growth?
I think CV, we should not forget that we are talking from a very low base when we talk of a growth rate.
Of course.
I think one has to look at the absolute volume. So, and we are not a very significant CV player in any case for making a comment on the loan book growth.
Okay.
But I think the fundamental numbers, the absolute volume will have to overall increase, while the growth rate definitely is one indicator of moving positive.
Okay. Okay. Well, just one final question, since we have you with us. Your asset quality has been substantially weakening in the last many quarters. Since we spoke with you last, has the situation improved at all, or do you think that the worst is yet to come?
I think too early to comment. I think the next 2 quarters always are the best quarters for anyone who operates in the rural market. So I think I would restrict my comment.
I think we've lost connection. Thanks a lot for that, Ramesh. Well, it does look like he's a little hopeful of that the harvest month at least will mean, harvest quarters at least will mean lower NPLs for MMFSL. We have been speaking with Siddarth Bhamre and Anand Tandon. Okay, so Anand, what would your incremental list of stock additions be? Would they be defensives like IT Pharma, or would you nibble a lot into the cyclicals in the hope that things are troughing out?
Well, IT and pharma to me is what you would be continuing with, because that's what you already should be owning right now. Incrementally, if you look at where the action can be, I think, from the government perspective, I think the T&D sector is beginning to look attractive to me. And if you really have the view that things will improve, then I would argue that a lot of companies which are totally out of favor, especially in the power sector, actually offer deep value, because many of them are not going to go to zero. Now, this is obviously contrary to anything that a trader should be looking at. But when you get companies which are at or below book value, especially for example REC, PFC, even other NBFCs which are likely to be benefiting from a interest rate reduction cycle, which are not trading very expensive, then some of those I think look quite attractive to me. There are other sectors, but they are not really very large in nature, because the other way to play the market would be to see where the fact that the Chinese devaluation benefits in terms of imports. And there are a few companies that you could be looking at there, but they don't really constitute a sector as such.
All right, point taken. Anand Tandon, pleasure speaking with you this morning, and Siddarth Bhamre as well. Thank you very much for joining us with your strategies today. Well, as we come to the end of the pre-opening trading session, the markets are settling a lot lower and the bank nifty is literally taken it on the chin. But that was to be always expected. I would assume ICICI Bank would be under a bit of pressure. Bank of Baroda, State Bank, Axis, all of them are showing pressure because now there is pressure to bring down your lending costs. Your product price has to fall, and that will always mean a bit of a hit on the margins immediately. Other stocks that are doing badly include Vedanta. That's down about 2%. So, there is a commodity angle as well, which is pulling down these stocks. Tata Motors is down. That's the normal China effect with the Chinese manufacturing PMI not looking too hot. That stock also is a bit lower. In fact, it's actually red all over. I would think it's about 46 on 50 in the red for the Nifty itself, and that index is down 0.8, 7,900, barely being held by the skin of its teeth. Mid caps are almost as bad.
Oh yes, the mid-cap index is threatening to break down today, and in terms of individual stocks, all your Gammon Infras, JP Power, Adani Ports, JP Associates are all under pressure today, and even some of these defensives like the pharma stocks are also indicating that perhaps there could be a sell-off. So it doesn't look like it's going to be a good day at all. In fact, all the cues are indicating that the start would be on the weak side. But let's do one thing. Let's do a quick recap of Shubham Agarwal's stocks for the day. He had two buy calls. The first one was on TCS, where he recommends a target of 28.20 and placed the stop loss at 24.50, and he also had a buy call on Bajaj Corp with a target of 580 and a stop loss at 465. He also has two sell calls, first on Axis Bank with a target at 455 and a stop loss at 530, as well as on IDFC, where he sees the target at 108 and a stop loss at 141 rupees.
Okay, those are Shubham Agarwal's picks. Let's also recap for you Siddarth Bhamre's trading strategies for the day. He had three short calls. First was a sell call on ICICI Bank with a target of 256 rupees, stop loss at 287. Next was his sell call on Tata Motors. He recommends a target of 303, stop loss at 357. Finally, he is also bearish on HDFC. He places a target at 1108 and the stop loss at 1231. Well, let's also get you the trading picks coming from our Super 6.